Alrighty. So once again, I'm your facilitator today, Killian Golden, corporate trainer here at Sprout Mortgage. Today's webinar Wednesday, we'll be going over Sprout's investor products. So without further ado, please go ahead if you have not registered. If someone gave you a link, drop your email in the question or chat box there. This recording as well as presentation will be sent to you. There's a lot of matrices involved that I'll be skipping over, but those matrices are in this presentation for you to refer back to in the future. So we're going to start off again with our Sprout Mortgage Advantages. We have an awesome loan scenario team. They are available for any type of loan scenario, bank statement calculation, or even guideline clarification. We have iQualify, which I'll go over here in the next slide. We have Acorn, which is our AUS system. We have our Sprout Marketing Store. We have the team that I belong to, the business development team. We're here for anything from presentation decks, virtual trainings, referral partner network training, etc. And then of course, always keep in mind that exceptions are possible. So strongly recommend you to reach out to the loan scenario team for any type of guideline clarification or even exception there. So for iQualify, you can access this at www.sproutwholesale.com, and in the top right-hand corner, you will click iQualify, and then after you click iQualify, you will be prompted to put in different data points. So things like loan amount, LTV, make sure all of these are filled out, and then you're going to click Submit. After you click Submit, it will then provide you maybe one or two products that, based on the data that you put in, that your borrower would then qualify for. As in this example here, you'll see that the alternative program would be the Sprout product, the J10. Then you're going to click Get Pricing. Once you click Get Pricing, you'll be able to select borrower paid comp, lender paid comp, amortizing, interest only, etc. And then once you click these, you'll be able to either email the pricing summary, you'll be able to email a pre-qual letter, or you can simply proceed to the portal and start the loan process. AUS is once again our automated underwriting system, Acorn. And then we have our Sprout Marketing Store, which is very useful. It's white label, so you can put in your own information, your broker information, phone number, so then you can get the word out that you're doing non-QM loans. And this is our product overview. We have our A10 bank statement. It's going to be 12 or 24 month, business or personal, or 1099. We have our full doc, which is our E1 expanded jumbo, and then our J10 select jumbo. Then we have our asset depletion, the A11, which will be assets 110% more than the loan amount divided by 60 months. And then we have our investor debt service coverage, which is a 1.15 to 1 ratio. And then we have our foreign national products that follow into those categories above the J10, A11, and the I10. And then for your reference, we have our universal features on the Sprout programs. Definitely refer back to this. And then for the main topic, our investor loan programs, details to know. The borrower will sign a business use affidavit, which will be in the disclosure package. No primary or second home occupancies. The I series, which would be your I-10, the A-10, A11, and J10 programs, properties held in an LLC or a corporation are allowed. The seasoning requirements, 4-year seasoning on foreclosures, Chapter 7 bankruptcies, deed in lieu, or short sales, and then 2-year seasoning will be a max of a 65%. And then your prepayment penalties. So we have a 3-year prepayment penalty on only investor occupancy programs, and then the penalty will equal 6 months of interest on the 80% of the original balance. And then the following states below here do not allow prepayment penalties. Other details to know on non-owner occupied business purpose loans, they don't require, we don't require previous landlord history or even mortgage history, no primary or second home occupancies. Once again, LLCs and corporations are allowed. These are going to be non-TRID, so you have a shorter turn time. And then escrows are required with waivers now available at 60% or less if they meet the requirements. And then the programs that are available are listed here on the right. So if you have your domestic investors, these are going to be your US citizens and permanent residents. That will be your I-10, the debt service coverage ratio. So rents need to be just 15% more than the mortgage payment for layman's terms, or a 1.15 to 1 ratio. This will be either based on the calculation of gross rents, or we will take it from the rental addendum on the 1007 appraisal report. The properties that are qualified for this are 1 to 4 units, warrantable and non-warrantable condos. Condotels are not permitted. Minimum FICO score of a 680, minimum loan amount of $100,000, and then your max LTV of 70% for a primary. Your required reserves are here, and then the mortgage history on the bottom of this slide. Here's the matrices. Like I said, I'm not going to go over these. You're going to just go back to this for reference. One thing I wanted to point out, this is a calculator that we use. Once again, you're going to be using the net rental income from the debt service coverage or the rental figures on the 1007 appraisal report. You then plug that in, and then you compare that to the monthly mortgage payment. And then, of course, in this example, we get 145.2%, which is obviously 115%, greater than 115%. So then it would pass the debt service coverage. So with our bank statement programs, these are also available for our investors. The bank statement analysis process flow is listed here. You're going to have your 1003. It's okay to have to be determined on the subject property. You're going to have your credit report, bank statements, income documents, condo docs if applicable. Then you're going to upload the scenario request on the Sprout website. And then within 48 hours, we'll have a turn time as well as which program we recommend them go into. And this is going to be best practices for turning in a bank statement analysis request form. Try to fill this out in its entirety. It helps our bank statement analysis team out tremendously. And also as far as communication, the back and forth, because they'll keep asking for, is it, personal, business, etc. So make sure that this is filled out. Now, as far as the 4 different methods of bank statement calculations, the 50% profit margin, the borrower received 50% of the total monthly deposits from the 12 or 24-month business or personal account, as defined in a type 1 to 4, is not defined as a type 1 to 4 business. I'll go over the type 1 to 4 business in the upcoming slides here. We have our business account analysis, we have our personal account analysis, and then we have our 1099 tax form. Also, one thing to note is anything that you submit cannot be unseen. So what I always recommend is start with 12 months, and then if it's beneficial to the borrower, then of course provide an additional 12 to get that total 24-month. Because if you have declining income when you're using the 24 months of income from the most recent 12 months is declining, then the declining amount will be used. And then if it's increasing in the most recent year of the 24 months, then the deposits will be averaged over the 24 months. Now on to the types of businesses. So a type 1 business will receive 85% profit margin with the 15% expense ratio factor. These types of businesses are businesses that the borrower is providing them. So something like a piano teacher is a type 1 role. And then a type 2 business, you're going to receive 60% profit margin with a 40% expense ratio factor. And then the business here has no more than 2 employees other than the borrowers. And the business is a service business where the service is provided by the borrower. And then another thing to note here is does not require use of heavy equipment or vehicles. This would be a different type of business. Type 3 business profession will receive 35% profit margin with a 65% expense ratio factor. And then the type 4 will receive 20% profit margin with an 80% expense ratio factor. This will be business types in the precious metals or jewelry industry, currency, auto, real estate. And so the A10 bank statement program, self-employment, the minimum of 1 borrower on the transaction must be self-employed. Blended income is allowed. Your max DTI ratio of 50%, and then the minimum credit score is going to be a 660 with 680 in New York with a max LTV of 75% to $1.5 million. Cash out will be a max 70% LTV primary residence with a 740 credit score. And the available products are listed here. On the A10, foreign national borrowers are not eligible. The minimum loan amount is $100,000, and then the eligible properties are 1 to 4 units. 2 to 4 units are limited to 75% LTV. Warrantable and non-warrantable condos are eligible, as well as condotels. And then since we're talking about investors today, if it's an investor, the borrower must sign a business use affidavit. The reserve requirements are listed on this slide. And then gift funds are permitted. The credit history is listed below, as well as the appraisal requirements. And then here are the A10 matrices. And then for the full doc programs that are investor friendly, you're gonna have your J10 Select Jumbo and the A11 Select Asset Optimizer. So for the J10, here's the high level overview of the J10. You're gonna have a $100,000 loan amount up to $4 million. It's gonna be a 1-year full doc up to 85% max LTV, 2 to 4 years seasoning on credit related issues, and then 6 months reserves, 50% max DTI with a 660 plus FICO score, 680 in New York. And then your A11 will do 100,000 minimum up to 4 million, and then your asset depletion with full docs up to 80% max LTV, 6 to 12 months of reserves, 50% max DTI, and then a 660 plus FICO score, 680 in New York. And then the available terms that are offered will be a 5-1 and 7-1 arm, and a 5-1, 7-1 arm interest only 15 and 30-year fixed, and then the max interest only is 80%. On this program, foreign nationals are permitted. Max LTV for them will be 60% with a maximum loan amount of $2.5 million. I saw in the chat that my audio is not on, but I see that some people are replying, so I think my voice is on. Okay, perfect. Awesome. Thank you, Rodrigo, for confirming that. We'll address the questions in the chat here very shortly. The required reserves are listed here. Like I said, the credit will need a 4-year seasoning from foreclosures, short sale, deed in lieu, or bankruptcy. And then the J10 matrices are listed here. And then the A11 select asset optimizer. So the borrower is required to meet the net asset test of 110% of the loan amount. You'll then divide that by 60 months to derive the income for a max 50% DTI. And then the borrower receives 100% credit of the retirement account in their portfolio towards the calculation. Unrestricted accounts are eligible, and the borrower is required to be fully vested to use the funds. So we're going to go over an example. So for the loan amount is 400,000. The assets must equal 400,000 multiplied by our 110% of the loan amount. So we need to be looking for a 440,000 or greater in assets. So we have our example borrower, Chris Smith. He's 49 years old and has a Voya account, and his current balance is 650,000, and this is a source of qualifying income. Obviously, $650,000 is greater than the required 440,000. So we are able to use this. So what we're going to do is step 1, take that $650,000. We'll then divide that by 60 months, which we will then get $10,833 per month. And then we're going to take that $10,833 as the primary source of income to qualify if it works with the 50% DTI ratio. If the $10,833 is not enough to meet the DTI ratio, then other sources of income from the borrower can be added to qualify. So what are some qualifying sources? Funds on deposit in a domestic bank account, either personal or business. The business bank account can also be counted as borrower reserves. The borrower must be self-employed in this instant. The percent ownership of the business will be determined the percent of the asset that can be used. So if the borrower has 25% ownership, then they can use 25% of the business funds. 100% value on retirement accounts. Then you have 100% of stocks, bonds, and options, which are Fannie Mae acceptable sources and are either held in a domestic brokerage account or they're held directly by the borrower. The portfolio is issued by a domestic corporation or political subdivision of the United States. Directly held foreign stocks and bonds and assets in foreign brokerage accounts are includable in the depletable assets. We've gone over the minimums on this as well already. For foreign nationals, this can be a second home and investment property only. 60% max LTV with a max loan amount of 2.5 million, and then the same FICO scores, if they're available, apply 680 in New York. One thing to note on the A11 program is the down payment and closing cost funds can come from liquid assets used for qualifying, but the remaining proceeds must still be 110% of the loan amount. So in that example of 400,000, and they would need a minimum of 440,000, that 440,000 still needs to be left over. In addition, they would need to have the down payment and closing costs. So our example of having 650,000 in their account, that would be no problem, right? So just keep that in mind that they still need to have 110%. And then the matrices are listed here. Now for our foreign national investors. So the foreign national programs, we've gone over the programs already, the J10, A11, and I10. Just wanted to go over their eligibility requirements. So for the foreign national info, in the gray box, if they're interested in a primary residence, that's what they'll need: valid social security number, eligibility to work in the US, and then the visas listed there. And then we have the green box. Since we're talking about the investor programs, this is what you'll be focused on here. So these are temporary resident visas, and those will be listed there. And then the orange box are ineligible because of diplomatic immunity, so the Class A visa and the Class G visa. When it comes to foreign nationals on their income requirements, for full documentation, we'll need these to be translated into English via a third-party vendor. For the salary wage earner, they'll need at least a 1-year W-2 plus 30-day pay stub of the borrower's country's equivalent, or a letter from the borrower's employer setting forth the total year to date and for the previous 2 years with a breakdown of base wages. For self-employed, they'll need at least 2 years of history, a CPA letter of the stating the borrower's income for the past 2 years, expressed in the borrower's home currency, and then of course that conversion into US currency. You'll need a copy of that CPA's business license, and then a 1-year tax return if required, depending on the program, and then a copy of any business license are required as well. When we are looking at the rental income, copies of the leases setting forth the rental income, copies of the most recent 3 months of bank statements showing receipt of rental income into a bank account belonging to the borrower, and then a translation of each lease into English as well. Now for the credit report that's required for a foreign national, yes, we need to run their credit to make sure there's no trade lines. So obviously if they have a social security number, that would get them out of the second home investor program that we're talking about today. But for our other programs, you would still need to run their credit. And so you'll use all ones or all nines. And so obviously if they come back with credit, then they will need to be on the minimum for the program. So a lot of our programs are a 660 FICO score, 680 in New York. So they'll need to meet those minimum requirements to then qualify for that specific program. But for our investor series, they should not be pulling back any trade lines. So all ones and all nines would be acceptable there. And then POA requirements, they'll be needed to be recorded and insured by a title company, not permitted on cash out transactions. They must be specific to the transaction, and it must be executed by all parties on the 1003, must be approved by Sprout and the title company, and then no conflict of interest among parties. And then it must be notarized in a US embassy or consulate, and then 2 original POAs are required. So that should pretty much wrap up the presentation on our investor series programs as well as the foreign nationals portion of it. So if you're not sure if your client will qualify, just be sure to send over a scenario with the 1003, credit report, bank statements or income documents, and then if applicable, the condo questionnaire or HOA litigation documents. You'll upload those documents to our secure portal at sproutmortgage.com under the scenario request tab. If you have an account executive, please CC them. And then we also have our support desk open from 9:30 a.m. Eastern Time to 9 p.m. Eastern Time, and the telephone number is listed there. And then we have other resources that are available to you. Like I said, our Sprout marketing store, you're able to white label and customize them so you can put your information so you can start marketing that you're doing non-QM. And then a call out to our loan submission training, or as I like to call it, our portal training. This is available every Monday and Thursday from 1 p.m. Eastern to 2 p.m. Eastern. And then the global GoToMeeting link is listed here. As I said, I will be getting this deck out to you guys, so that link will be in there as well. And if you guys need any other product training, we're here for you at bizdev@sproutmortgage.com. As you guys already know, we do webinar Wednesday every Wednesday, and we go over a specific product every Wednesday. So if you guys need any other assistance, definitely feel free to reach out to us. And let me go and look at the questions here. If you have any questions, feel free to go ahead and put them in that questions chat now or in the chat box. And I'll go over the questions here with the answers as well. So will a realtor be a type 1 business? I'll go back into the slides so that we can have this for reference here. The short answer is yes, they would be categorized as a type 1, and we do allow cash out for our investor products. And then do you use interest-only payment as qualifying payment? Yes, we can. When using the calculator, you can choose between an amortized payment or an interest-only payment. And then can the J10 take out a construction loan? I also need to get this taken care of. I need to look through the guidelines, and we'll get through on that. And then, do you allow cash out for foreign national investment property in the state of Texas? Yes, we do allow cash out for our foreign national investment programs, but Texas does have different laws, so I'll also have to get back to you on that. And then our definition of foreign national, do they need to be living in the United States? No, most foreign nationals come here on a passport. If they're living here on a visa, they would follow under the category as a non-permanent resident alien. I'll also be sending out a recap with these questions and answers as well. So that should wrap it up, guys. Thank you for staying tuned, and we will see you next Wednesday. Have a happy holiday, rest up, and we'll see you next week. Take care. Bye-bye.